folks, Dan Frio here, the rate update. Today is October 21st, 2020. What happened today? Unfortunately, rates were at a 2-month high. The last 3 days, rates keep going boop, boop, boop. Don't go away, because I'm going to show you where we're at and what today's rates are. See you in a minute. Okay, so I've been trying to preach to everybody, please don't put it off. If you're looking, if your thoughts are, I'm going to refinance or buy a house, do it. Don't try to time it perfectly, because pigs get fat, hogs get slaughtered. So that being said, the headline news today came out and it says mortgage rates highest in nearly a month. That's what's going on. There's news coming out. There might be an economic stimulus plan. They said they're getting somewhere, then they said they're not, then there might be a plan by election, then there might not be. If there's a stimulus plan, I'm going to tell you right now, rates are going up, because everybody's going to jump in the stock market and say, heck with the bond markets. Mortgages, they're the biggest piece that creates mortgage rates is what's called the MBS, mortgage-backed securities. It's a bond that trades. I preach it every day and we follow that every day. So let's get on to the MBS market. What did it do today? So we go here. Here's what am I talking about when I say the MBS market? Well, what happens is we batch up a whole bunch of mortgages and we sell them off, or Wall Street sells them off as bonds, okay? This number right here is what's happening to the price of a bond. And I explain this every day. Real quick, Bonds 101. The more you pay for a bond, the lower the yield. The lower amount you pay for a bond, the higher the yield. What is the yield? The yield is the rate, the mortgage rate. So we love when the prices go up. Then we want them to keep going up and up and up, because the higher it goes, it drives down the yield. It'll never be zero on mortgages, but it'll drive them down lower and lower and lower. But today, we saw a market that was down. Actually, we got a rate lock alert again this morning to say lock. And yesterday, the rates came out this morning, and this number was down another in the teens, and we ended up almost flat again. Yesterday, the same thing. So here's what I'm monitoring right now, because the stimulus plan is the thing on the side that is teetering this whole thing. That and what's going on with the Fed. Okay, so let me go through this right here, and what's this chart is telling me. I'll say it that way, so then I can relay that to you. This is what's happening with the price of the bond. And again, remember, as the price goes up, the rate comes down. So this is the price you pay. The more you pay, the lower the rate. So if you look at this, rates were lowest in the last quarter right here. So when I see headlines saying, rates just hit a record low and we're here, I don't know about you, and I haven't been drinking today, this is higher than this, so that means this rate has to be lower than this. Okay, you get it? Because again, the more you pay for this bond, the lower the rate. So again, the higher this chart, the lower the rate. Okay? So what we've been watching right now is some Fibonacci levels, and these are right here. I'm just going to go through a short term with you right here. What I mean by Fibonacci levels, it gives us a ceiling right here and a floor right here. Okay? So if we're trading, it should trade between here. It's probably going to bounce around. Look, it bounced and hit it and stopped. It basically bounced, hit it, stopped. Bounced, went a little bit below it, but stopped. The ceiling is right there. This was a ceiling back a long time ago, but look, it hit there, stopped, hit there, stopped, hit there, stopped. There's reasons for these lines, and these lines are called Fibonacci levels. Well, we should be trading right here if the market is just stagnant, the Fed's doing what they need to do, and there's really no economic news in the markets. Well, we're below that, okay? So with the trend is going right now is down, which is not good, okay? And so we should be hitting this resistance level. The part that scares me is we've been teetering up in this part of, let's cut this in half. We've been teetering on the top half of this for a long time. Now we're below it, and there didn't seem, these lines through here I'll go through in a second, didn't seem to be much resistance other than for a couple days. So the next resistance down is right here. Okay, this line here. If we go below this, rates could really spike. Okay, again, lower here, higher rates. Higher here, lower rates. So I'm a little concerned right now because of this. Should we really have a breakout? No. Why? There's really nothing going on. The economy isn't fantastic. Inflation, nothing really there. There's really nothing that could or should really spark this thing other than what's the government doing? And they have all the cards right now. And the stimulus package is basically 50 of those cards out of 52. So, I'm concerned with this right now. If we go any further down, I'm going to probably start locking everybody. Because, there's not a huge difference in rates between these, but I still think we should be up in this range right here, right in this level here. I hope that makes sense to you. For everybody who follows me every day, I hope this really makes sense. For newbies, leave a comment down below. Let me know where I'm kind of losing you there. But basically what we're trying to do is saying, okay, here's what's going on with rates. They're pretty stable right now. Don't worry, but in the future, rates are going to, the only way direction they can kind of go is up from here. Have we hit the bottom? I'm saying yes, unless we have Corona Pandemic 2 along with a nasty flu season. And that could possibly shut down the world. Okay, so I'm bored you enough with those charts. Now, what's going on with the markets? Well, the Dow was down 97 today. Pelosi and Mnuchin, Pelosi is the Democratic, kind of top brass Democratic person. Mnuchin is the negotiator for Trump. They're trying to work out a stimulus deal. They're like, okay, they think they got something. They might be able to finalize something tomorrow, but they don't think it could really take effect till after the election. There was a bond auction, went okay. Mortgage rates it inched up, and I'm going to show you those in my rates right now. But still, rates are saying right here 1% lower than we were last year at this time. Okay, so if you bought a house or refinanced last year, you might want to look at doing something, especially if it doesn't cost you much. I'm going to go through. You have options with us at basically no fees. The economic calendar for today was basically stagnant. Nothing really happened. Beige book. Federal beige book, nothing really there. Tomorrow we have jobless claims and everything. I don't think there's going to be anything going on there. Okay, so now let's get on to rates. Largest mortgage companies to see where I fit in the mix. 9 times out of 10, if there's 10, say 10 companies lined up, I have the best or the next to best rates in the country. Not only rates, but the fee structure. And if you're in the process right now, I'm going to give you some data at the end. I'd love to give you a secondary quote if you already had a quote. If you don't have a quote, please reach out. I would love to help. Tomorrow we're going to do an exclusive video on debt consolidation loans. How, why, what, where does it make sense? And we're going to show you that yes, in almost every case, it's going to make sense for you to consolidate all of your high interest rate bills into one mortgage. That being said, where are we with today's rates? So let me explain this. There's 3 different variations of if you're looking to refinance or buy a home. Okay, you're either looking to purchase a house or refinance, and there's 2 variations of refinancing. One we call rate and term. It's basically you're taking the current balance and changing it. You're either changing the rate and the term, or the rate only, the term only, whatever. You're not getting out any cash. And then there's what we call a cash out. And cash out rates are higher because they're riskier. Here's kind of just a side note. You're going to see how rates go up because of lower credit scores. Okay, one of the biggest components to mortgage rates is the mortgage-backed securities market that we just went over a minute ago. The other thing is what we call loan level price adjustments. Basically, it's adjustments to that rate for risk. So, for example, the lower your credit score, the higher the risk, the higher the rate. If you're looking to just refinance your current balance, it's less risky to the bank than if you're looking to pull out cash. If you want a 30-year loan, that's more a longer risk factor for the lender than a 15-year term. So those rates are lower. If you have a primary home single family, it has a lower rate than if you have a 4-unit building that's an investment property. So the whole gist of this is just to explain to you, there is not just one rate out there. There's a combination of, it could come out to hundreds of variations of what your rate would be. Okay, so let's start out. If you're looking to buy a house or just refinance a rate and term, your current balance to a 30-year fixed, here's where you would be at an 80% loan to value. Loan to value is your loan amount divided by the home's value. So if you have a $100,000 loan on a $200,000 home, that's 100 divided by 200 is 50%. So hopefully that explains that. The 740 credit score or higher, basically you're peaked out at 740. It doesn't matter if you have a 740 or an 800, you get the same rate. Okay? What's used in this number is we pull all three credit reports, TransUnion, Equifax, and Experian, and we take the middle score. We line them up numerically and use the middle score. If there are multiple borrowers, we do that with every borrower, and then we pick the lowest of those. So let's say you have 3 borrowers on a loan, and the first one's middle score is 800, the second one's middle score is 700, and the third one's middle score is 740. We use the middle score of those numerically, so it'd be 740. I know I'm throwing a lot at you, but it's an education piece. So let's go through it. If you have a 740 score at 80% loan to value, if you're purchasing or doing a rate and term, rate is 2.875. Over here is your APR. APR is based on a $250,000 loan on a 30-year fixed term with this criteria right here. So these are your APRs. 700 credit score at 80% loan to value is 2.99. 660 credit score at 80% loan to value is 3.625. Look at that. That's 8. Look at the difference between that. Okay? And it's all because of the credit score. So again, if you call in and say, Dan, what's today's 30-year fixed rate? What's your credit score? What's today's rate? Well, it could be 2.8, could be 3.6, could be higher. I don't know. Let's go to the next thing. Cash out. This means you're pulling out cash over $2,000. So it's your current mortgage balance plus anything that in excess of $2,000 would fit you into this category. 740 credit score at 75% loan to value. Rate would be 2.99. 700 credit score is 3.5. 660 credit score is 4.625. Look at the variation of here. That's 1.75 higher rate just because of the variations in credit scores. All right? Again, just trying to explain that part. The biggest component of this is I'm trying to explain how mortgage rates work and how there is not just one rate. So now we go over to the 15-year term. 15-year term at the top again is we're looking to do a purchase or rate and term. 740 credit score, 80% loan to value, 2.375. 700 credit score, same rate. 660 credit score, rate would be 2.5. If you're looking to cash out, again, a 15-year term, cashing out at 75% loan to value, 740 credit score, rate's 2.5. 700 credit score, 2.625. 660 credit score, 2.75. To qualify for any of these conventional programs, you need a 640 credit score. Okay? Now we scroll down to my government programs. These are FHA and VA. FHA loans will go to 96.5% if you're looking to purchase or refinance your home. Okay? 740 credit score on an FHA program, purchase or refinance, 2.75. 720, 2.75. 680, 2.75. You would go down to a 600 credit score and it's 3%. Okay, those are the rates on an FHA program. The rates are the same with VA, but the caveat on VA is you can go 100% financing. Doesn't matter if you're purchasing a home or refinancing. You can even pull out cash, and we'll show you tomorrow on how you can pull out cash and take a mortgage to pay off all those high interest rate credit cards. Just think if you could get a mortgage at 2.75% and pay off an 18 or 20% credit card. Does it make sense? I mean, would you rather have a 2.75 rate or a 20% rate? Being sarcastic. So the rates are the same here as they were on FHA. So 740 is 275, 720 is 275, 680 275, and 600 is 3%. Now the program we're known for, and we're becoming more and more and more known for, our jumbo program. Our jumbo programs are fantastic. Generically, these are our rates. But we have pockets throughout the country, especially in California, that we have boutique programs that will go to 95% loan to value up to $1 million. 90, so that's 5%. You can buy $1 million house with 5% down. I can almost assure you're not going to find that anywhere else. But if you're looking for a jumbo mortgage, if you're looking to purchase or refinance the rate and term of that jumbo mortgage, here's what we got. With a 780 credit score at 75% loan to value, we explained all these prior, the rate would be 3%, 30-year fixed, not an interest only, not a balloon, not an adjustable, a 30-year fixed rate. 760, 3.125, 740, 3.25, 720, 3.375. Those are my rates for today. So what do you need to do to get started? Well, one of a couple things. Here's what I ask people every day. Well, first, before I forget, give me a thumbs up. I'd love to have more thumbs up. Leave comments down below. I answered a whole bunch of comments today. And keep subscribing. We hit over 10,000 subscribers about 2 weeks ago. We're at about 10 or 15 a day. I'd love to have like 100 a day. That'd be awesome. But if you're looking to do something, or you're like, you know what, I'm in the process right now, buying a house, or I'm refinancing or doing something. But Dan, what can you do for me? Do me a favor, email me, and I'm going to give you all that information in a second. Email me the loan estimate that you have from the company right now. Once you put in a loan application, we as the lender have to send you either a loan estimate or a fee sheet. It breaks down the loan amount, the rate, the fees, and I can't get that through your heads enough. The fees. People are spending thousands and thousands and thousands of dollars that don't need to be spending it. And I'm reaching out to some people. I had one the other day. They were at 3.375 with $8,000 in fees. 3.375. I got them 2.875 with $895 in fees. They emailed me. I emailed them back. They didn't respond. Guys, you're talking thousands upon thousands upon thousands of dollars that, all I can do is I can give you the quote back, but I can't make you push buttons. So that being said, send me the loan estimate that you get. I'll write all over it with red pen. Almost every time we're beating what the competition has. So if you haven't done anything yet and your rate's over like 3.5%, let's look at it. And if you're like, I'm only going to be here another 3-4 years, maybe let's look at it and do a no-cost refinance. You're going to skip 2 months mortgage payments and probably save $200-$300 a month at least. Otherwise, I wouldn't even do it. And I might even come back to you and say, don't even do it. You're saving $50. Don't. It's not worth the headaches. And I'm honest with you. I had a client today that sent me in. They're looking to buy a $1.7 million home. And they got a quote from somebody else, and they said, well, if you go conforming, here's my rate. And if you do a jumbo mortgage at, I think it was like 65% loan to value, here's what I can do for you. I responded by saying, here's what I would do. I would go 80% loan to value, only put down 20%, and leverage the money. So you might say, Dan, well, why would I want to carry a huge mortgage? Well, in that person's case, they were needing to bring $500,000 less to the closing. So my response was, if you're buying a $1.7 million home, you're doing pretty well. Why don't we not use the $500,000 as a down payment? Talk to your wealth advisor, and the rate that I was quoting them was 3%. Can your wealth advisor get you a return in the markets of 3% or more? Probably. And that money's liquid. And it's appreciating on you. That was my comment back to them. So that being said, sorry for rambling. How you get a hold of us? And you're like, Dan, I really want to do something. How do we get a hold of you or your team? Well, let's get to it. The best way to do it is go to therateupdate.com. I just added a video today. We did a video walkthrough here. It shows you part of my team, our building, and our philosophies. And I'm really excited that just got posted. We just posted that today. But you can go down here and we have an 800 number right here that you can call us at 844-775-5626. Or if you'd like to, here's how a lot of people get a hold of me, is my name is Dan Frio, DANFRIO, right here. You can email me at dfrio@preferredrate.com and send me the loan estimate you have, the fee sheet you have, a mortgage statement that you might have, or just a breakdown of here's what I got, what can you do for me? And that's the best way to do it. If you'd like to get started right away and you're like, Dan, I don't have any of that, but I really want to get started right now, just click the apply now button or get a quick quote. Somebody will be back. Somebody will get on the phone with you. Once you hit the apply button and completely apply, there's going to be somebody on your phone in about 5-10 minutes after you finish. We're not calling to hard sell you or do anything of that sort. We're just trying to walk you through the process, put you in the right program for you, and no hard pressure sales. It's like, here's what we can offer you. If you'd like it, let's move forward. If not, that's fine too. If you want to think about it, think about it. No high pressure sales. So that is it for today. God bless you. Take care. Have a great night. And I will see you tomorrow, God willing. Same time, same place. Bye-bye.